Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. When the market changes, how can you tell? There's lots of indicators out there. One of the best canaries in the coal mine are the precious metals. Today we'll visit about what gold signals to real estate investors, and we've got a great guest on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me as usual, it's Russell Gray, our financial strategist.
Hey, Robert.
We love talking about real estate. We love owning real estate. We love driving around and looking at real estate. But real estate isn't all we pay attention to because there are a lot of signs in the market that come from other places. Back in the day, we were 100% real estate investors. We went to 100% real estate conferences. And in 2008, we got 100% of our butt handed to us because we weren't paying attention to the big picture. It was an awesome opportunity because it invited us to learn more about the macro, about broader picture economics. That's why you hear folks on our show who aren't necessarily real estate people, but they have a lot to say because they look at the big picture. And as a real estate investor, you swim in an economic sea of all kinds of other stuff. So it's absolutely incumbent on you to pay attention to more than just real estate. Although all real estate is local, you want to know your local markets for sure. You also have to know bigger picture stuff. So today, we're going to talk to one of the smartest people we know on the general economy, but also precious metals.
Yeah, so Dana has been tracking gold in particular as a precious metals dealer for a long, long time. And a lot of times people are asking us, why do we pay attention to gold? Why gold? What does gold have to do with real estate? Does it produce income? You know, it doesn't really have a viable purpose in any portfolio that the average person sees. But really, I would make the argument that it does. So before we get into the interview with Dana, let's just kind of set the table a little bit. I think that's important. When we invest in real estate, one of the things we want to make happen is equity. We talk about it all the time, right? Cash flow is equity. Kenny McElroy goes in, buys a property, increases the income, and then the equity is a multiple of that income. So if a property is selling for 10 times its income and you increase the income $100,000, you just increase the equity by $1 million.
Hallelujah.
Well, equity is interesting when it's in your real estate, but it isn't liquid. It's not usable. If you can borrow against it, that's great. Gold is a way to keep equity on your balance sheet that is outside of your real estate. So it's an alternative to equity. And that's kind of the role it plays on your balance sheet. The other thing is it's an alternative to cash. Why would you want to do that? Because when you are in cash, you have exposure to the banking system. And we now know for a fact that there is some exposure in the banking system. We saw Silicon Valley Bank, Signature Bank, even a major international bank like Credit Suisse go out of business. And if you're over those FDIC limits and you've got wealth on your balance sheet that is liquid but exposed to the banking system. That's why you see a lot of money moving out of the banking system into custodial accounts, into the money market account. And you can see the Fed's emergency facility is constantly being drawn on by the banks. Now, you may or may not understand what I just said, but that's why we talk to people like Dana, because those are the clues that tell us that something's going on. So if you have some wealth in gold on your balance sheet, you've repositioned equity from real estate into gold, and we've talked about that many times on this program in the past, or you've converted some cash from your balance sheet into gold as a way to have an alternative form of currency, if you will, or liquidity that can be converted into any currency and isolate you from financial system risk. That's its role. The other thing that gold does is gold is a barometer of the health of the dollar. And so if you're investing in anything, dollar denominated, looking to earn dollar profits, looking to borrow in dollars and pay in dollars, and everything is dollar denominated, and something happens to the dollar, and that's why we watch gold, because it tells us about the health of the dollar, then it might be good to understand how to take the dollar's temperature and then how to quickly move away from risk in the dollar, or maybe you take advantage of some strength in the dollar. Again, people in the gold space, guys like Dana, they understand it. So that's just a little context why we love to catch up with Dana from time to time and why we think it's important for you as a real estate investor to pay attention to gold.
We all operate in whatever currency our home country has. If you're in the U.S., then you think about dollars. If you're in Europe, in the EU, you think about euros. Wherever you are, that's what you think about. But gold has been money for thousands of years. So here's what gold is not. It's not a fad. It's not a get rich quick. It's not a sizzle story. It's just slow and methodical, and it holds its value. We're interested as real estate investors for the reason we're going to talk about today. You may be interested as an investor to have some of your wealth in gold or silver. That's up to you. You'll be able to make that decision by the end of this show as we meet Dana Samuelson up next on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 49th year, it's the world's longest running investment conference and features some of the biggest names in economics and investing, including James Rickards, George Gammon, Danielle DiMartino Booth, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting an invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make your plans to join the Real Estate Guys, the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. And we'll see you there.
Hi, I'm Mark Victor Hans. You're listening to The Real Estate Guys. If you want to expand your consciousness, expand your wealth, expand your future, and have more delight and excite in your future than in your past, keep listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com and your favorite podcast outlets. We're talking today not about real estate directly, but about the precious metals and what they can teach us about the global picture, economically speaking, and then how that might influence our decisions when it comes to real estate. Welcome back to the show, our good friend, Mr. Dana Samuelson. Hey, Dana.
Hi, Robert. Hi, Russ. Thanks for having me on.
Always good to have you with us. You know a ton about this space, and it's hard to believe for a guy who looks as young as you are that you've been in the business as long as you have. But these are interesting times, and what we've noticed lately is that the typical market correlation, which isn't 100%, but more often than not, isn't necessarily happening now. People have been eyeing the metals for lots of reasons, but why don't you take us through how the precious metals market is informing investors today?
Well, I'll do my best because it is a bit of a conflicting picture right now. With the U.S. economy is showing some signs of strength and some signs of weakness, while the global economy is weakening. China's in trouble. They've got a property issues, and property ownership is a big part of their economy, and they've had a couple of spectacular failures. The German economy is weak. So the global economy is not doing that well, and the U.S. economy is faring a bit better. So what we're seeing right now is a situation where the dollar has been a bit stronger than we would have anticipated against other currencies. And it's similar to what we went through in 2022, only on a much smaller scale. Now, precious metals, gold in particular, tends to trade inversely to the dollar. So when the dollar is stronger, gold tends to be weaker, and vice versa. Last year, the dollar strengthened inordinately, about 18% against other currencies, and gold got pushed way down to a 16.35 cyclical low. Now we've seen the dollar, puff up a bit from what looked like a dollar break in July. It's back into trading range, and gold and silver are in a sideways trading range between about $23 for silver and $25, and for gold between about $1,900 and $1,975. So right now we're in a kind of a choppy market, but we are seeing signs that the U.S. economy is slowing a bit. The Fed tends to focus on job creation as the most important factor, but as our mutual friend Danielle DiMartino Booth likes to say, the Fed looks through the rear view mirror. And jobs are one of the last things to go when the economic cycle weakens. And I do think we're seeing some of that evident with job creation on a monthly basis, still pretty good, but declining in a bigger trend. And we're seeing job openings, new jobs that are available are falling as well. So employers are looking for less new employees than they have been. And new job creation is moderating. It's not bad, but we're in a bit of a slowdown. So we'll just have to see how this all transpires. Meanwhile, inflation, which has been driving the bus, continues to be a bit sticky, although it is coming down. And the Fed, in response to inflation, as everybody knows, has raised federal funds rate to the highest level, 5.25% to 5.5%, that we've seen since, I think, in 22 years, going back to 2001. The big question is the Fed going to continue to raise rates maybe once more? Are they done? So markets are gaming, what the Fed's ultimately going to do. And that's kind of where we are, as we get into the fall season here.
Well, and Dana, when you talk about the strength of the dollar, people have a hard time getting their mind around that. You would typically think, well, that means that I can buy more with my dollar. And it's true against other fiat currencies. So if your dollar, whatever your currency is, say the US dollar, is strong against another currency, and you decide to go there and shop around, your exchange rate is favorable. I remember Danielle last time we talked to her was talking about her new Italian shoes, which she wasn't going to buy in Italy, but the exchange rate was so good because the US dollar was strong against the Italian currency at the time that she just couldn't pass it up, right? And that's part of getting your mind around it. Now you take gold, which Robert Kiyosaki calls God's money. Gold's been money forever, not currency, but money. And when you see something like inflation happening, isn't that one of the roles gold plays in a portfolio, is protecting us against inflation?
Yes, absolutely. Gold holds its purchasing power very well over time. Now, that doesn't mean it's not going to be influenced by short-term, events like a much stronger dollar or a much weaker dollar or a higher, interest rates or lower interest rates. And gold is underperforming a bit right now relative to how inflation has been, although we have seen it brush up against new 21st century highs over $2,000 an ounce a couple times in the last 2 or 3 years. But gold also tends to climb a wall of worry. And right now, the markets are seeing some complacency. So things are not quite as hot as they were following, shall we say, the bank failures that we had earlier this spring when Silicon Valley Bank failed. Now, what have we had since then? We've just had, Moody's or Fitch has downgraded 17 U.S. banks, and we've seen U.S. debt downgraded by Moody's from AAA to AA plus. And this is all a function of, too much debt, imbalances in their risk mitigation. Some of the banks hold treasuries that they bought when yields were lower, and now the value of those treasuries are lower against newer treasuries that have higher yields. So on balance, if they had to sell some of those their core holdings, they would suffer losses. And this is why. So there's instability in the financial system that just hasn't percolated to the top. We just have to see how this all plays out over time.
Well, absolutely. And it's like the real estate market. There was a lot of folks in 2022 who were calling for the big recession of 2023 and how, home prices were going to go down and the price of everything was going to go down, which actually might have been good news for gold, if you will, because of that wall of worry. But we really didn't see that. I mean, we had tech stocks saving the stock market a little bit, and we've had the job growth you've spoken of. But if you dig deeper, the kinds of jobs that are being created are not necessarily high paying or high quality jobs. They still count as jobs. So there's more to it than just the headline numbers. And it's one of the things we appreciate about you. You keep your eye on not just gold and silver, but everything else, which is why we wanted to talk today. But as real estate investors, people may or may not be interested in owning precious metals, and we'll have that conversation. But I think everyone wants to understand how these various indicators of the markets, whether it's, crypto or the stock market or bonds or gold and silver or oil and gas, might inform us about where the market is headed. And it's not rocket science because, like you mentioned, sometimes the metals behave in a different way than we would have thought. And maybe that's because, and maybe you can help us understand that the market's a little different. It's not just think about a person that owns, 10 ounces of gold and has 100 ounces of silver. That person doesn't move the market, nor do most of those people buy and trade actively because of the friction involved. We can speak to all of that. But I think sometimes these big holders of the metal who hold it because it never goes no bid and they want a portion of it in their portfolio, aren't they the ones that maybe move the market more in reaction to some of the other economic news?
Yes, absolutely. The market is controlled by the futures market, which is the COMEX exchange. And this is where 100-ounce contracts are bought and sold on margin. You only have to put about 10% of the value to control, 100 ounces of gold on a futures contract. So these are big speculators are involved in the market, and they tend to bully the market around a little bit. That's why the gold price can react daily to whatever the economic news is because they're big speculators in that can move the market around. Now, the amount of contracts that trade relative to the amount of ounces of gold that trade are much, much bigger than what's actually delivered by the COMEX exchange. So the speculation in the market compared to the physical market is much, much bigger. And that's why the price gets pushed around by the speculators. Now, when I first started in the early 80s, it was the physical price that drove the market. And somewhere in the mid-90s, when computers helped us to accelerate our ability to trade and measure all these things against each other in a much more advanced way, it's like AI is doing now in some ways with other things. That's when the paper market, the COMEX market, started to really dominate the actual price. And we see some of this choppiness that's around some of the day-to-day financial figures that are released, whether it's jobs report or inflation report. So it can be bullied around a bit, and it doesn't quite make sense all the time. But if you look at the bigger picture, gold has been tracking higher. It's been setting higher highs and higher lows. Over the last 20 years, it's averaged about an 8% annual gain in almost every currency around the world. And that has pretty much tracked the growth of our debt in the U.S. It's a little bit lumpy because gold can get a little ahead of itself at times and a little bit behind at times, but the trend lines are the same. And as you said, to me about a year ago, which I'll never forget, you like to buy real estate and you like to buy precious metals to give yourself a gift in 5 or 10 years.
Yeah.
And that's how most people should look at both of those entities, real estate or precious metals.
Yeah, it's such a good point, and maybe we transition over to that because we do look at the metal market as a barometer, and it primarily is gold. The difference between silver and gold we'll visit a little bit about in a moment, because I think if people are trying to understand where it fits in the portfolio, we'll want to have that discussion. But to me, gold's not an investment. It's not something I'm buying expecting it to go up in value, because my premise, you've already mentioned, but I want to make sure no investor left behind, gold's value doesn't ever change. An ounce of gold is worth exactly an ounce of gold. And because it's malleable and because there's no counterparty, it is a fairly safe place to have a small portion of your portfolio. So it functions more like insurance than it does like an investment. Can you speak to that?
Yeah, that's exactly the way most people should wrap their minds around it. Number one, it's not that the price of gold is actually going up so much. It's that the value of the dollar that buys that ounce of gold is declining. That's really how people should look at it. The purchasing power of the dollar continues to erode over time. And gold is not necessarily an investment that's going to make you wealthy, but it will help to be a great savings account for you if that's what you want to have for the longer term. And it's a way to get some of your money, your currencies, hard-earned, rewards out of the dollar, which is declining, and put them into an asset that has no counterparty risk, that is portable, transferable wealth, that's universally accepted around the world, and immediately liquid. These are the major features of gold. It doesn't pay a dividend. It doesn't offer a yield. That's why when yields are higher, it tends to have a harder time competing for dollars. And we have higher yields now, which is helping to hold the gold price a bit in check. But when those yields start to go the other way, which inevitably will happen, then gold can catch a real bid. And that's when you can see it move, inordinately relative to other things higher. And I think we are in that kind of a setup now. We just haven't seen it materialize yet.
Well, and there's a couple of things that I think have affected the metals market that I want to get your opinion on. The first is, as you mentioned, if I can go get a treasury for 5 or 5.5%, don't you think that perhaps some people make the decision who would have bought gold for that purpose to invest in what they consider fairly, if not totally, low risk by treasuries? And secondly, what about things like cryptocurrency? There wasn't a cryptocurrency market 15 years ago. There's a gold market 15 years ago and 30 years ago and 100 years ago. But didn't we see people that might otherwise have put money into metals either decide to go into crypto or into treasuries, or at least split the difference?
Yes, absolutely. I mean, when Bitcoin was on its wild tear from under $10,000 to $62,000, $63,000 per Bitcoin, that gave gold a lot of competition. And it's a lot of younger people that haven't lived through a real bad economy or haven't seen currencies fail like other countries have over time, that don't really appreciate the hard money aspect of what precious metals are all about and how they are good insurance for you. So gold did get competition from cryptos, but then, of course, Bitcoin made a big correction back down to about 17,000. I think last time I looked it was about 28,000. So it's rebounded. But it's been a wild ride. Now, gold has not offered that kind of volatility at all over time, not that kind of wild volatility. So the competition's a little less there. But with regard to treasury yields now, in the last year, they've gone up so much that there is definite competition for available investment dollars. It's too bad Peter Schiff isn't with us today, because saying that treasuries don't have any risk, I think, would be something he would challenge right now. Because, the U.S. debt just continues to explode. It's crazy, and it's not going to get better. And now our debt service is becoming inordinately high. We're going to have a $1 trillion, interest payment on our debt this year, which we've never had before. That starts to create a debt spiral, which is not good.
Yeah, good point. Hey, by the way, before we're done, we're going to tell the listeners how they can hang out with you and me and Russ and Peter Schiff all in one place before we're done. But, you mentioned the fact that cryptocurrency has wider swings. And I think part of that's just it's not an established market yet. I can argue pros and cons for pretty much any investment, and I have both. But I think that the gold market has been in existence for so long, and it's so proven. And once you get your mind around the fact that you're preserving the value of today's dollar with the metals, I think that helps. And, for me, every ounce of gold I bought, I turned US dollars into an ounce of gold, and at that moment in time, I preserved that trade value, if you will. So gold is still worth what gold is worth, but it cost me less dollars in the past to buy it, and now I would get more dollars for it. So before people get all excited about, well, I'm just going to put all my money in gold, understand when gold goes up to $3,000 or $5,000, or if you believe some of the folks out there, $10,000 an ounce, that's not necessarily a great thing, because it means that the value of your home currency has gone down so much that it's $25 for a cup of black coffee at Starbucks. So the reason to have it is to hedge in case. Then there's the whole side of the market, which is different than that, and that's getting into the specialty coins, the unique coins, and those kinds of things. And I know you have an opinion on that, and maybe we can talk a little bit about it. But before we get into that part, I think let's draw the distinction. We've been talking about gold. Let's draw the distinction between gold and silver, two different metals with maybe different places in a portfolio, but they also work together really well. Take us through why an investor would consider gold, silver, or both.
Well, I think everyone should consider both, but they do have two slightly different purposes. Gold is very compact. You can store a lot of value in a small space. 100 ounces is about the size of a paperback novel and weighs about 8 pounds. Now that today, is about $195,000 worth of value. The same amount of silver would take up, a couple of wheelbarrows full of silver, and you need a couple of really strong guys to move it around. You'd have a storage and a portability problem with that kind of value in silver. And that's the difference primarily. Now, gold has been in quite a lot of demand among central banks for the last 12, 13 years since the great financial crisis, because central bankers are hedging their bet against other currencies defaulting or other bond defaults with other nations. That's the way I look at that. You can store a lot of value in a small space, and you can't do that with silver. But what silver really is spending money in a crisis. If an ounce of gold is worth $1,950 and it's near an all-time high, and an ounce of silver is worth $25 and it's about half of its two previous highs, well, number one, it's a much better currency to use as spending money in the event of a crisis. And number two, it does have better potential investment opportunity as well, relative to its previous two highs of $50 an ounce at $25 today. But silver tends to lag, could be disappointing for a bit when gold moves, and then it plays catch up. But when it plays catch up, it can play catch up pretty sharply. So timing the silver market is a bit more important than timing the gold market, which is a bit more stodgy. Silver oscillates at a wider price degree percentage-wise relative to gold. So that's why it's important you look at something like the gold to silver ratio. How many ounces of silver does it take to equal an ounce of gold? Today, that ratio is about 85-1, which means for a nerd like me that silver is just kind of cheap relative to gold today. And it's a better value for investment, but it may not be the best choice for whatever your needs are.
Our guest today is Dana Samuelson. He's a physical gold dealer. We'll tell you how you can learn more about what Dana does, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do. And the content, faculty, and attendees are amazing. If you're serious about taking your real estate investing to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all takes place next summer, so to get the details before they're released to the general public, send an email to summit@realestateguysradio.com with the subject Summit 2024. We'll add you to the advance notice list, and you'll be invited to spend a fun-filled week learning and networking with more than 25 class sessions and breakouts, plus small format roundtable discussions, great dinner conversations, and a ton of fun. Send an email to summit@realestateguysradio.com with the subject Summit 2024 and be among the first to get the details to join the Real Estate Guys and an all-star faculty on the 22nd Annual Investor Summit. As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Hello, I'm Brian Tracy, and I'm here today with Robert Helms. He's one of the real estate guys, and he always has wonderful ideas to share with you that can improve your life, improve your income, and help you to achieve more than you ever thought possible.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you ever want to do bigger deals using other people's money, or you wanted to learn how to invest alongside larger projects, well, come on out to the Secrets of Successful Syndication. We do this event twice a year. The next one's right around the corner, October 6th and 7th in Dallas, Texas. You can get all the details by sending an email to syndication@realestateguysradio.com. That's syndication@realestateguysradio.com. We've got Dana Samuelson with us today, and we're talking about how gold can signal what's happening in the market. It's also a great way to hedge. Before we get back to our conversation with Dana, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's Real Estate Trivia question. As soon as you hear the question and think you might know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, because if you're the winner, we're going to send you one of our favorite books, and chances are you've already read it, Rich Dad, Poor Dad by our good friend Robert Kiyosaki. If you've not read that book, you need to. If you have read it, I'm sure you can think of someone in your life who needs to. Either way, we'll give away a copy on Real Estate Trivia today. Last week, we had Bob Frazier on the program. We asked this: the location of Tony Stark's mansion in Iron Man is the same cliff from another famous movie scene. Which one? Well, all the way back to the original Planet of the Apes, at the end where the Statue of Liberty is sticking out from the sand, that's the same exact cliff. It's where Charlton Heston says, "You finally really did it, you maniacs, you blew it up." Classic scene from one of many Planet of the Apes movies. I remember when I was a teenager, my cousin and I, for $2, saw 5 Planet of the Apes movies back to back to back to back. Boy, times have changed. Here's our real estate trivia question for this week. Since we're talking about gold, in which country did gold first appear in a coin? Yeah, where was gold first used in a coin? Where in the world? If you think you know or just want to guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. We'll need your name, the answer to the question, and your physical mailing address, because if you're the first person that gets it right, we're going to send you the little purple book, Rich Dad, Poor Dad. That's today's real estate trivia question. We're with Dana Samuelson from American Gold Exchange, and I was just with the author of that great book we gave away, Robert Kiyosaki. We had dinner a couple of weeks ago, and people always want to ask Robert, what he invests in. And one of the things he said at the conference we were at is that he loves real estate, but he doesn't love real estate for the reasons that a lot of people love real estate: cash flow and appreciation. Robert loves real estate for 2 primary reasons: debt and taxes. The tax advantage of real estate and the fact that he gets to control more of it through leverage, and that interest payments are deductible. So we could spend an hour debriefing that short strategy of his. But the other thing he mentioned, and he's mentioned this, you've heard him say this on the summit, and I know he's a client of yours, he takes profits from real estate and he buys the metals. He doesn't think of it like we're talking about as an investment. He doesn't ever plan to sell any of it. He's just a stacker. He stacks it up. Now, having said that, Dana, that's not the only way to play. I mean, you're a dealer. You have people that buy gold and silver from you, but you also buy gold and silver from them. Can you give us like a pulse of what's happening in the physical market these days?
Well, we have a couple different profiles of clients. We have people that follow the metal prices pretty tightly, and they tend to like to buy the dips. And I think that they're intelligent because the market is moving higher. We're setting higher highs and higher lows. So buying the dips is a great strategy. And then there's a lot of people who become emotional about their investments and then tend to chase the market. So when things are breaking in the financial system, like an SVB bank failure, we have a lot of people that rush in and want to buy. That's really not the best strategy, but sometimes that's what it takes to motivate you to do something. And fear is a good motivator. And as I said before, gold tends to climb a wall of worry. So what we've been seeing over the last couple of months is something different than we have seen in the past. We've had a bit of a little quieter summer, but I'm seeing more sellers slowly percolate into the market. And I think that speaks to the state of the economy today. Inflation's been up for a couple of years now. Interest rates are higher. Wages have, just now caught up to inflation where they hadn't before. So the average person's spending power has declined. And I think we're starting to see some modest distress sellers, which means to me the U.S. economy actually may be weakening a little bit more than most people realize. Now, we have to see how that transpires. But that means if the Fed could eventually cut rates sooner than some people realize, and that'll give gold a boost to go higher again. Something breaks in the meantime, all bets are off. As I said, the economy is a bit confounding right now, and our business activity is a bit confounding as a result, too. But I am seeing a few more sellers than I thought I'd see at this point in time, kind of coming out of the woodwork. And that means people need cash.
Well, it's an interesting point. You talked about how on average the metals appreciate, in the 8% range. And folks who bought gold 10 years ago, 20 years ago, and really just didn't plan on selling it, look at everything going on and think, hey, maybe I take a little profit off the table. Do understand that the minute that you do that, you have the opposite side of the trade I explained earlier, and now you're taking fiat currency in exchange for a hard asset that's been proven to be money. But sometimes that's what you need to do, and that is a great use for gold and silver. Like, I never intend to sell any of it. I hope my great-great-grandchildren get every ounce, but I know that if I had to, I could get to cash instantly, because that's the other thing. It's super liquid. We talk about, always being a bid, meaning you can always sell it. It may not be at a favorable price, but you can always sell it. And there's some real keys to that because of the liquidity. We love real estate, obviously. We're the real estate guys. And since we've been hanging around you, we've been buying more gold and silver. And since you've been hanging around us, you've been buying more real estate, which is awesome. But real estate's slow. And if I need to liquidate my real estate right away, I mean, I have to just, bring the price way down or give terms or something like that. You'll take gold and silver quickly if someone has to sell.
Yes, gold is immediately liquid upon delivery to whoever you're selling it to. And it's, there's some modest logistics involved in getting it to where it needs to go, but that's really not an issue. But as soon as we receive gold that someone wants to sell to us, we're either mailing them a check, FedExing a check, or sending a bank wire instantly. And it is one of the most liquid assets you can have. That's why it pairs well with real estate, which doesn't have the same liquidity. So it's, everybody, should have, 6, 7, 8% of their assets in precious metals. That's what a financial planner will tell you. That's a study that the World Gold Council has done. It's enough to give you that hedge that you should have against financial uncertainty as an insurance policy, but it's not too much where you lose opportunity in other areas. And I do love real estate as a hedge against inflation because they're not making any more land unless you're, trying to make a military base in the South China Sea and you're China and you're building an airport. That's really the only new land that's being made. Otherwise, precious metals are hard to get out of the ground. They're limited in supply. So both play to the same basic factors of more and more people on the planet, less and less ounces or less and less acres to go around.
Love that. Well, hey, before we're done, we'll tell you how you can get a hold of some great resources that Dana's put together so you can learn more. If you've never invested in the metals, it's worthy of your consideration and certainly doing the research. So before we're done, we'll tell you how you can get a couple of great reports that Dana's written and an awesome series of videos that Dana's done with Russell Gray. But before we do that, coming up in November, it is the 49th annual New Orleans Investment Conference. Takes place in New Orleans, as you can imagine, and I know that you've been there a bunch, probably more than almost anybody we know. Tell us about the conference and why you're excited to come back.
Well, the conference was started by my mentor, Jim Blanchard, who was the man most responsible for the private relegalization of gold ownership in 1974. From 1933 to 1974, the U.S. citizens couldn't own gold. And when we devalued the dollar and depegged it from the gold price in 1971, Jim understood that the dollar would lose value and that gold was a good thing to own. And another person who understood it immediately from his rich dad was Robert Kiyosaki. So Jim started the New Orleans Investment Conference back in the 70s, and my colleague from back in the day, Brian London, has carried it on since Jim passed away in 1999, and it is one of the best annual investment conferences anyone can attend for cutting-edge financial information and to learn about the hard asset sector, metals, mining companies. Brian London, who puts the conference on, has done a remarkable job attracting some of the most intelligent minds there are who can speak to the state of the current economic cycle. Before inflation was on anybody's radar, Grant Williams brought it up at the 2020 virtual conference, saying, hey, inflation is going to be an issue, and nobody thought about it at that point in time. And we've seen other great guests speak to what's happening in the economic cycle. So if you want to have a cutting edge opinion about what's happening in the world economy right now, you can get it at the New Orleans Investment Conference and get a leg up over the markets and over some of your competition, if that matters to you. I've learned more about what's coming from the New Orleans Investment Conference than I have from any other investment conference that I go to many of in the course of a year.
Well, and what is really awesome about it is it's not just gold and silver. You'll also meet the folks who are involved in that industry before it is a coin you can hold in your hand. Those are the mining companies, major miners, junior miners, exploration companies. That's another fascinating way to invest. But what Brian does is he brings together some of the economic thought leaders so that we paint that big picture. And this year, in addition to Dana Samuelson and the real estate guys, you'll hear from our friend Peter Schiff. Peter will be with us. Also, George Gammon, Danielle D. Martino Booth, Jim Rickards, Rick Rule, and an all-star cast. You're definitely going to want to attend. And as you know, Dana, one of the nights of the conference, the real estate guys hold a cool little gathering for our listeners and friends. If you want to be invited to that and get a link to sign up for the conference, just send an email to neworleans@realestateguysradio.com, neworleans@realestateguysradio.com. You'll get all the details. Hey, before I get you out of here, you've been with us on many of our investor summits, and the last 3 have been investor summits on sand. But we're getting back on the cruise ship. It's the return of the Investor Summit at Sea. Dana, tell us why you're excited about the summit.
You and Russ bring together 300 or 400 of some of the most amazing people every year, primarily in the real estate field, but other faculty members as well, who are just giving, caring people. It's an empowering event. You have an abundance mentality. So it's not like I'm competing with somebody for something. And I really have just been inspired by what I call the most unassuming group of overachievers I've ever met in my life, and that I get regularly to spend a week with every year on the summit. And it's just a really uplifting event in many ways, because most of the people that come, whether they're faculty members or attendees, they'll give you the shirt off their back if you ask them for it, literally. That's how giving these people are. And they're extreme overachievers in some regards, and you'd never know it by talking to them or looking at them. They're very humble people. So it's a wonderful community, and it's a wonderful learning event, and it's a wonderful way to really get to know people that you don't when you go to a 2 or 3 day conference and you say, hi, how are you? Here's my card. That's not what this is about. You really get to learn who people are, get to meet them, and get to build lifelong bonds with them in the process.
We call it Summer Camp for the Affluent. And if you're interested in attending the 22nd Annual Investors Summit at Sea, just send an email to summit@realestateguysradio.com, and we'll look forward to seeing you on board. Dana, as always, it's a wealth of information when we get to talk to you. We appreciate it, and we'll look forward to seeing you at the New Orleans Investment Conference.
Thank you, Robert. Just a few weeks away now, so I'm looking forward to seeing you there. Thanks for having me.
That's Dana Samuelson from American Gold Exchange. When we come back, we'll tell you how you can get a hold of some excellent information Dana's put together, whether you're a seasoned metals investor or brand new to it. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from December 8th to 11th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 18 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful. And wait till you taste the food. But the real opportunity is the real estate investment potential. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me December 8th through 11th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize on the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, December 8th through 11th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hi there, this is Danielle DiMartino Booth, author of Fed Up, an insider's take on why the Federal Reserve is bad for America, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Right around the corner, it's the secrets of successful syndication. If you've ever wanted to invest in bigger deals alongside proven operators, or you're at that point in your real estate career where you could do more deals if you had more money, then come on out to the secrets of successful syndication, October 6th and 7th. All the details on the website at realestateguysradio.com under Events. Well, my goodness, I always learn something when I hear from Dana Samuelson.
Yeah, Dana's a smart guy, been in the business for decades, was trained up under one of the all-time greats, hangs out with a lot of the smartest people in the space. And of course, to understand the gold market and to make the case for gold to his clients, he has to pay attention to the macroeconomic picture. He pays attention to the dollar, to interest rates, the bond market, which is the source of the interest rates, the currency, and what's going on internationally. There's a relationship between gold and silver that is indicated in the gold-silver ratio. That's something else to pay attention to. We call these monetary metals, and then you have other precious metals like palladium and platinum, and then you have strategic metals that are used in industry. So there's a lot to the world of commodities and metals in particular, but gold is unique, and gold and silver are unique in that they have been money used in the financial system for decades. And it wasn't until 1971 when the world really came off the gold standard for the first time in thousands of years. And we're living in kind of a weird little bubble for 53, 52 years now, where the world has been off the gold standard. And the question is, can that sustain? Is it a new normal? Or was it a timeout, and are we going to end up going back to a gold standard? I think there's a probability, at least a possibility, that we would go back to a gold standard as people get concerned about how the dollar is being managed, and they would lack any faith in any other fiat currency or government-issued currency, and they would want something to keep it accountable. So I think gold is probably going to end up being a bigger part of global finance and individual finance in the future. And so again, I just encourage people to pay attention, maybe consider putting a little bit into your portfolio to have an alternative to cash and or equity as a different way to hold it on your balance sheet. And then pay attention to guys like Dana and the people who actually live in the space all the time, because they're the ones who knows what's going on, not just at the macro level and reading the charts and graphs and all that, but they're also day-to-day talking to real-world investors who are putting real money at risk every day, investing in this space. And you can tell the mood of the market by what's happening at the street level. And the only way you get that is you got to talk to people like Dana who live there.
Russ, I remember you and I in Robert Kiyosaki's office when he showed us that he had just bought some Bitcoin. And we're like, whoa, that's interesting. Why are you buying Bitcoin? He said, so I'll pay attention to it. And if you put a little gold or silver in your pocket, you will pay more attention to it, and that will serve you well. Another thing about the metals is they just have that proven, stable history. You know, a couple weeks back, we were talking with Bob Frazier and talking about long-term trends are the things to bet on, not short-term fads. I was just reading that a gentleman paid $2.9 million for an NFT of the very first ever tweet from CEO Jack Dorsey back in the early days of Twitter. Paid $2.9 million for that NFT and recently sold it for $1,871. Oops. Now, I'm not trying to, say people that invested in NFTs were dumb, but I think just the fact that you're buying a picture of a Bored Ape says something about you. But gold isn't like that. You can make money in fads and sizzle, but it better be a small part of your wealth that you're risking for that. You don't want to have all your wealth in gold and silver, but it might make some sense to, even more important, watching gold helps us determine the direction of the market and the sentiment of the market, and that is huge. Big thanks to Dana Samuelson. Hey, if you want to learn more about it, if you're new to the metals and you want to really get an A to Z tutorial, Russell Gray and Dana Samuelson did an awesome series of videos on silver. And, silver is not gold, but they work well together. And as Brian London always says, if you like gold, you'll love silver. If you're interested in that series, it's totally free. Just send an email to silverseries@realestateguysradio.com. silverseries@realestateguysradio.com. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.